Welcome to Smart Investing Market Insights on TaipanFinancialNews.com. I'm Krista Das. Today we will take a look at the current market sell-off and show how to take advantage of this weakness. My next guest says, buy now. Today's economic numbers confirm our bullish outlook for the markets. Joining me is the editor of Money Map Report and Money Map VIP trader, Horacio Marquez, who will reveal key entry points in the market. Thanks for coming on the show, Horacio.
Thank you for having me, Krista.
So tell us about these economic numbers. The U.S. economy is gradually decelerating into a mid-cycle slowdown. Explain your bullish sentiment.
Well, basically that has been our view for quite a while, that basically the Fed has been keeping rates high in real terms in order to have the U.S. economy decelerate, and we're seeing this confirmed in the economic numbers that we've seen in the last month and actually today. For example, as we expected, the labor revisions to the prior months brought labor to a level that is consistent with a mild slowdown in the U.S. economy, and not really seeing the U.S. economy going into a recession. At the same time, we're seeing consumer spending holding up pretty well, and actually auto sales re-accelerating. And on the inflation front, very importantly, we're seeing that PPI inflation, that is the producer price index, the producer inflation is decelerating, and this morning we just saw the consumer price index come down to a very sustainable level, and those two inflation metrics will allow the Fed to continue cutting interest rates. With this, we expect the economy to re-accelerate in the fourth quarter and maybe in the next year, and basically avoid a recession.
Horacio, let's consider U.S. exports versus imports for a moment. We are already seeing exports picking up strongly and imports weakening. What does that tell us about where to invest? Which sector should we be looking at in the next 6 months?
Well, we're seeing actually consistent with our thesis, as the global economy keeps expanding at a very strong pace, with the slowdown in the U.S. economy, we're basically seeing our exports growing at a level of 3 times the rate of imports. And that makes it very attractive to invest in U.S. exporters and obviously in the rest of the global economy. That is, all the sectors that will be benefiting from that strong growth, including, for example, commodity producers, especially in energy and in agriculture, and as well in mining. Other sectors that thrive from the global economy, like, for example, U.S. multinationals with significant sales abroad. Like, for example, we saw Yum Brands doing very well, and this morning we saw Coke doing tremendously well. Interest rate sensitive and sectors that are sensitive to the cyclicality, and especially sectors that do well towards the end of the year, like, for example, technology and dominant financials, which should do very well in an environment with decreasing interest rates and a U.S. economy that will be re-accelerating. This morning, for example, we saw Intel reporting very, very well, and one of our recommendations is AMD, which reports tomorrow, and as well we should see both revenue and margin expansion, which is the holy grail for investment. As well, we should be very cognizant of the fact that in this environment, U.S. exporters should continue doing well. We have seen Boeing doing very well and just being set back by some production issues, but moving forward, Boeing should continue doing very well. And last but not least, the first baby boomer retired this week. And that is an indication that the baby boom generation, as it ages, will be consuming healthcare to a much greater degree. So healthcare continues to be a favored sector, and that's a secular trend that will continue for many years to come.
Tell us more about tech. How influential is that in the economy right now?
Well, tech is very influential. Actually, you see that technology is one of the favored sectors of the market. Wall Street players like it, hedge funds and other types of funds are also favoring technology. And today, this morning, as I just mentioned, we got one of the benchmarks in tech, Intel, which is showing very attractive revenue growth and margin expansion, and actually is forecasting an increase in their margins from 52% to 57% in the fourth quarter, which should do very well for technology prices. We are seeing with the expansion of the global economy, all of these economies are consuming in increasing rates American technology and European technology in order to modernize their systems and basically join the global economy. So tech is a very attractive sector that also benefits from the fact that in general the tech sector has a very low levels of debt. So they are not subject to the credit squeeze that we just saw beginning in August.
Are there any other particular stocks within the tech sector that you would suggest we keep an eye on?
Well, at this moment, we are concentrated in AMD, and we also entered. We're very fortunate to recommend VMware, which is a technology that will revolutionize the way networks are run by basically introducing a concept that's too complex to address right now, which is called virtualization. But the benefits of that software is that it reduces the maintenance and increases the efficiency of networks by a very large amount, depending on the applications. So today, if you run a network, you have to use VMware, and they have no competition. The stock basically priced its IPO, I believe, at 29 early this year, and this morning, it was trading at 103. So, and this is the very beginning of the rally in VMware. Another stock that we like in the tech sector is Internet networks. Basically, as we all know, and in fact, this broadcast is a proof, the piping of video over the internet is growing exponentially. And Internet networks, symbol INAP, is basically one such company that is dominant in the sector of providing the service of piping this stream of video and audio content through the net, and guaranteeing that the video will arrive to the end user with no interruptions. So we recently saw Akamai reporting very well, and INAP should be reporting pretty soon, and we should be much like we saw in Akamai. I believe that we will be very happily surprised by INAP's reporting.
Horacio, great information. Unfortunately, we're out of time. Thanks for being on the show.
My pleasure, Krista.
That's all for this week's Market Insights. If you would like to learn more about Horacio's predictions and his investment research publication, Money Map Report, you can do so by clicking on the screen at TFNFinancialNews.com. Please join us again next time. Until then, here's to great profits from smart investing.